Lee Williams from Shawbrook Bank as our first speaker. And you will have received, now today what I've done is to send all of you, this has come from me, so all of you will receive the product guides for every single lender that's presenting today. If you haven't got it, I'm just looking to see if any of them have bounced. They haven't. So if you haven't got it, then check your spam. And if you still haven't got it, then maybe either pick up the phone, give us a call, or just pop an email to either myself or one of the team, and we'll send it again. It was only about 6 megabytes in size in total, so it should have got through no problem. So a little bit about Lee, first of all. This should actually say, I realised, Lee, when I did this last night after I closed everything down, that should actually say 4 years now. So Lee is the Regional Development Manager for Shawbrook Bank, covering East Anglia and Essex. He's been with Shawbrook for nearly 4 years. And prior to that, he has 30 years experience in financial services, predominantly with high street banks. Lee looks after 115 brokers in his region, helping with regulated and unregulated bridging, buy-to-let and commercial and semi-commercial investment mortgages. His speciality is working with brokers to shape large loans to present to their complex deal forum for early stage board approval. There you go.
Thanks, Tony.
And Lee's interesting fact, Lee is a keen snooker player, misspent youth, and has won a couple of amateur tournaments at local club level and once played against a professional player who I believe was Barry Pinches.
That's right, yeah. Local Norwich player,
so I've still got some memory left. Great. I'm not going to challenge Lee to a game of snooker because obviously, because I did get to the semi-final of the Lloyd's Bowmaker Bournemouth snooker tournament all the way back in 1986. I should have won it, but I didn't. But I've not played snooker since, so I'm probably a little bit rusty. So Lee, it's over to you. The first slide is yours. I will see you in 15-20 minutes.
Thanks, Tony. And yeah, I love the new rebrand. It looks really good. And was also slightly concerned when you got to the ugly that you were going to go from one ugly to another, but thank you for that. So yeah, I'm Lee Williams. As Tony said, I'm the BDM that covers, looks after specialist financial services and have done for the last year. I've been with Shawbrook now 4 years today, actually. It's my anniversary, which I'm really proud of. And I just want to cover a bit today around Shawbrook in case some of you don't know who we are. A little bit about what we do and what we've done over the last 10 years of our existence. Predominantly, I'm going to talk about semi-commercial and commercial investment, but I also want to give you some exciting news about our brand new buy-to-let portal, which we launched a couple of months ago, just to give you a bit of information about that. And it's something that I'm going to talk about probably next month in more detail. So about Shawbrook. So it's actually our 10-year anniversary this year. So we were born out of the 2008 financial crash. We didn't have any legacy issues. And since 2011, we've significantly grown our business with over £6 billion worth of originations since we were founded. We're an old-fashioned type of bank that takes in deposits and then lends it out through various divisions, such as the commercial property division that I work in, but we also have a business finance division and a consumer division that looks after savings and personal loans. Very much traditional in terms of people being the lifeblood of our business. So I'm going to talk in a minute around the technology investment we've had, but we'll always be a bank that has the ability for human beings to make decisions, and every case that comes across our desk gets a pair of eyes looking at it so that they can use their discretion and use their experience to make the right decisions for the right deals. So I work in property finance division, as I said. So we're committed to supporting, initially when we were founded, it was to support the people that were unserved by the high street banks. So if you remember back at that time, if you're around, appetite to lend property and in particular in property investment. So that was the founding principle, was to serve the unserved clients. So our client profile is predominantly SMEs and professional property investors to help them with their property transactions. And the products and the solutions that we've got have been born out of brokers telling us it would be really good if you could come up with a solution for this scenario. Our teams work very closely with intermediaries, so we only work via the intermediary panel that we have, and it's not a panel that has all brokers on it. We have a closed panel, and we have brokers on panel that we've worked with over the 10 years that we've been around. And we value the relationship that our brokers have with their clients and their knowledge of their market, as well as the knowledge of our products and services. We're proud to have specialist expertise, very simple products to understand, and criteria that is published and available to all of our brokers, and they can see exactly how our underwriters underwrite and what they underwrite to. Our underwriters aren't sat up in ivory towers, not speaking to anybody, just saying yes or no. They can use the phone, they speak to brokers, they speak to clients. Because of that, get a really good understanding of the cases, and can obviously be able to then take into account other information that isn't black and white on an application to decide whether they can proceed with that case or not. We've received multiple awards for our products and services over the years, and some of them are listed on the right there. So I'm going to come on to the technology piece. So ahead of the curve. So we've just kind of invested heavily in our digital journey, and it's around about a £4 million investment so far. And really, this is just the start of the journey. So a couple of months ago, we've launched our new buy-to-let application, which is market leading in terms of what it does in the background and its speed. So to give you an example, if you were doing a let application, which is pretty much 80% of what we do, as you start to type in the limited company name, it will pull through all the company information, or the directors or the shareholders information. So you don't have to type all that stuff in. All you need to type in is the person's date of birth to make sure we've got the right person. And then when you put in the security details, it contacts Home Track, and it physically runs an automated valuation wherever it can, as if it meets the automated valuation criteria. So within a couple of minutes, we've done business searches, personal searches, we've done an automated valuation, and we can give a decision based on either the automated valuation figures, which you can see there and then, and so you can accept the automated valuation figures, or you can choose to go to a physical valuation. So what we've seen with this is that where customers have been able to be successful with the automated valuation, so that's on single dwelling houses, on a flat, within a block, up to £2 million in value in London, £1 million for the rest of the country, then we're able to go to formal offer within literally, I think the quickest we've done it is 3 hours from application to formal offer. In general, it's around about 24 hours. The only condition that you need to satisfy really is an application form, which is an automated form that the customer doesn't have to sign. When we send out the formal offers, they're done through DocuSign. So the only wet signature we need from the customer is on the legal charge. So we've even been able to get from application to completion within 7 or 8 working days. And we did a portfolio refinance of 8 properties that way, all completed within 8 days, where we could use title insurance to save having to do searches. So it really is a market leading, very, very quick portal, and Tony and the team have got access to this portal. So would strongly recommend, if you've got cases in that field where you need a quick decision and a quick completion, that we might be able to assist with those. Anyway, as I said, I'm not here to talk about buy-to-let today. So we've also got a market leading product switch proposition. So when somebody's switching from one of our bridging products to our term products, we only charge half the arrangement fee on the term exit, and the same valuer will go out to confirm the value after the works have been done. So it makes the process really seamless for the customer. It saves them time and costs, etc. We've also got a complex deal forum that we can present deals to. So as a business development manager, quite often I get presented with cases that don't quite meet our criteria, but we've got a really good experienced client, we've got a really good asset that we should be considering, and then it's something we should be supporting. So rather than get the broker to do a lot of work on the application, put it all in, and find that we never had any appetite to be able to do the deal, I can present the deal with just an overview really of what the deal is and what the reason for the exception might be, and at a very early stage get buy-in from our group credit, our second line group credit, as to whether it's a deal we can support or not. And then when the deal comes in from the broker, it's really difficult for an underwriter to not support it once we've already had the support of risk and underwriting and group credit. So it's a really good forum. It's not for £100,000 deals, but where you've got a large deal that we just need to get an indication for early on before going to valuations and other expenses, then that's a good forum to be able to present it to. So moving on to commercial investment and semi-commercial. So why do specialist financial services work with us on commercial and semi-commercial? And we have done many cases with them in this sector. Well, at the moment, post-COVID, there is limited sort of lenders out there that genuinely have appetite to lend on commercial and semi-commercial investment. During COVID, a lot of them closed the doors and weren't interested at all. We didn't do that. So we kept our doors open all throughout the first lockdown and have done so continuously. We didn't withdraw from any sectors, so we were still able to lend on retail, hospitality and leisure, albeit we perhaps limited our loan to value at that time to 65%. Having said that, for the right deal where you've got an experienced investor, you've got a property that could be let or sold within a reasonable time scale, and you've got a tenant that was still performing, and a lot of them still were, in fact some were thriving, then we were still supporting beyond that 65% restriction. Where we are now, we're able to now consider back up to 75% interest only on semi-commercial, and we can also support up to 70% interest only on commercial, or 75% if there's part repayment. And again, you know, where we've got retail, hospitality and leisure, we just want to sense check really that it's a deal that we can support at that level, but there's no additional referrals required. It's down to the underwriter's discretion to be able to support at that level, and we are doing so. Other reasons why people use us, well, we can do up to 25-year interest-only terms on commercial and semi-commercial investment. So some of the other lenders out there would actually load the rate if you went beyond a 10-year term. The high street banks would probably only want to lend up to a 5-year term or to the term of the lease, because they want to reassess their appetite to continue to lend in that sector to that customer, which means the customer's got uncertainty. It means that they might have to, well, they will have to pay another valuation fee or another arrangement fee. So we can give them certainty by lending a longer term than the lease. And as I say, 25-year terms available. However, after 5 years, there's no early repayment charge. So the customer could walk away after 5 years of a 25-year term without any penalties whatsoever. So that's a really good positioning point for our terms versus some of the other lenders out there that would have an overhang every year of the term, even if it was year 10 of a 10-year term or longer. Other good positioning points that help us win business are that on limited company lending, we only take 25% personal guarantees, and we don't take any debentures, which is a charge over all the assets of the limited company. So most lenders would insist on 100% personal guarantees, and some of them do still take debentures. They may be flexible on the percentage of the personal guarantee. They may not, but as standard, we start with a 25% personal guarantee, which we think is a good selling point. We also have our commercial underwriting team, who we recruited from Amicus Commercial, and originally they were at Aldermore as a whole team. So they're very, very experienced in commercial investment, and they have won awards last year as Commercial Underwriting Team of the Year, which they're really, really proud of. And obviously, as a consultative relationship team, you've got me and our sales desk who can help sort of give you a very quick yes or no as to whether it's something we can consider, or as I say, I can help shape the deal a bit more if it's a deal that needs a bit more tender loving care to get across the line, let's say. In terms of other terms available, we can do interest only, as I said, up to 25 years. We can do full capital and interest repayment, or we can do part amortization if the client prefers. We also allow customers to repay 10% a year of the capital without any penalty. So if they were on an interest only term, they can choose how much capital each year they'd like to repay, rather than perhaps the high street banks that would want capital and interest repayment to be very prescriptive about how much capital is repaid. As I mentioned earlier, our lending criteria is on our website, so all of the brokers can see what the criteria is and what the underwriters underwrite to. In terms of lease terms, we can consider various leases. So it could be 5-year fully repairing leases, which is typical. But also you get these business hubs where people lease offices for, say, 6-month licenses. And again, providing the customer's got a couple of years commercial investment experience, we can consider those too. In terms of experience to be able to go into commercial investment, so we're seeing buy-to-let investors looking to diversify and moving into commercial and semi-commercial investment. We only need a customer to have 12 months buy-to-let experience in the background. As long as there's 2 years left on the commercial lease for the property they're looking to buy, then we can consider them for their first commercial. So not too onerous in terms of the experience required. So what assets do we lend on? As I've mentioned, we can look at semi-commercial and mixed-use properties. We can look at retail units, offices, light and heavy industrial units we can look at. And as I mentioned, those kind of serviced office arrangements where they're on short licenses, we can also consider. Here's a case study that we did. So this was a customer who had a commercial investment mortgage. They were looking to complete a refinance and capital raise on 2 properties. So it was a multiple property portfolio refinance, releasing equity to help them finance their future growth plans. It was slightly more complex because there was a mixed nature of the portfolio. So there was residential as well as semi-commercial properties. However, we worked very closely as a relationship team with the commercial underwriting team. We felt comfortable enough with the covenant that was offered by the tenant of the commercial property, and we came up with a blended residential commercial rate to put the properties both on one loan. So it was a bespoke kind of arrangement we came up with. By taking this flexible and practical approach, we created a really good customer outcome, and we actually managed to get the indicative mortgage offer out within 5 days on this case, even though it's quite complex, and we completed it within a month. And this was at a time when the whole bank was working from home, as was the legal department for our lawyers as well. So a really good, swift result there. In terms of our rates and our terms, so our minimum loan size on all of our products is 50,000. So again, some other lenders out there would have rates, minimum loan size of say 150, maybe 200,000. So we can consider those smaller loans as well. Minimum term is 3 years, maximum term 25. We can consider quirky kind of commercial investments like vacant commercial, people buying a property and looking to change the use, serviced offices and licenses, and our rates are there below. So on semi-commercial, we start at 4.89%. We've got a limited edition semi-commercial rate, which is up to 70% loan to value, 5-year fixed at 5.34%, which is a really good rate. It's in the ballpark with the likes of HDB and Interbay, I would say, but the terms available there we can offer put us in a really good, strong position on those kind of deals. On commercial, we start at 5.49% on loans over £1 million. And as I said, in terms of positioning those rates, we're never going to be as cheap as the high street banks, but in terms of 25-year interest only, 25% personal guarantees, the flexibility with the early repayment charges, it's a really good sort of conversation to have with the client as to what their requirements are really. So that's kind of it on commercial and semi-commercial. I believe that's my 20 minutes and my contact details. If you have any inquiries or if you want to go to the team at Specialist Financial Services, then they'll be able to help you with any inquiries you've got on our products or our services. Over to you, Tony. Thank you.
Lee, thank you. Right, okay, so we're going to get on to the next one because I made a slight change to one of your slides last night. Was this any questions? So what we always do, there's no questions being done, so we always, just in case there's like tumbleweed going across because maybe the speakers answered every question that you might have had, is we get the speakers to actually set some questions from themselves. So that's always good because it means they should know the answer. So Lee, here's your first one. Now you might have already covered all of this. I missed a little bit of your presentation. I had to pop out to the loo. What is the required split on semi-commercial between residential and commercial to be able to qualify for the semi-commercial rate?
That is a good question that I set myself there, Tony. Thank you.
No problem.
So yeah, that's a good point actually. So with semi-commercial, there's some lenders out there where if the value of the residential element is less than 60%, then you would need to it would go on to the commercial investment product, which is generally a higher rate. So with us, the split is 50-50. So you just need the residential element, which in semi-commercial property, you tend to get more of the value in the residential element, unless you've got multiple commercials and a tiny little flat out the back. You tend to get most of the, more than 50% of the value in the residential, and therefore it fits on the semi-commercial rates. So that's where that 5.34% would come into play.
Okay, we've had a question from Mark. Can we get the case fully underwritten before valuation instructed?
Generally not, no, because we just haven't got the capacity to fully underwrite a case and then it never go to valuation because they go somewhere else. What I would say is we have got the ability for brokers to refer a case. So when you submit the case, if you wanted a specific part of the case you had sort of questions or queries on, then you can refer that. You can choose to manually refer that specific point, and the underwriter will pick it up and issue the indicative mortgage offer based on them reviewing that part, and then you're confident enough to go to valuation on that basis.
Okay. Peter's asked, what interest rates for second charge mortgages? Well, you're not really covering second charges today, so because we've got another speaker a little bit, and we always try and make sure that there's not, you haven't not listened to 4 different bridging ones. Certainly, I know that Shawbrook's second charge rates are probably about as competitive as they get at the moment. Probably best, Peter, if you phone the office, just speak to the second charge team. They're more than happy to go through all the options with you. It's probably best, because there are, as you imagine, there's not just one rate. There's a number of rates depending on the loan to value. So. Paul Rhodes has asked, if the case is rejected, will you refund the valuation?
Generally not, because by the time we've gone to an indicative mortgage offer, it's credit backed, and if everything has been sort of covered off at the point of application, there shouldn't be any reason for us to decline the application when it comes to full underwrite. And obviously we can, if we for any particular reason choose not to proceed, then we can release the valuation for them to take to another lender if they need to. But it doesn't come up very often, because generally the due diligence we've done before valuation means that we can proceed to a formal offer once we get the valuation back.
And it is fairly, let's face it is fairly rare that a case is declined. I mean, we all know, I mean, we've had a case that we're doing for a lender at the moment where the client sent through his bank statements, and for a solicitor and someone who earns a lot of money, he has absolutely no idea how to run a bank account, because there's constant bounce payments on the bank statements on pretty much all of his mortgages. He pays them eventually, but obviously lenders don't like to see that. So what we would do in that type of situation, we would just say to the client, look, it's not looking good. So what we suggest is, because that lender also insists that the valuation fee is paid, so they get the commitment from the client, the valuer is going to be in contact with you. Arrange the valuation so that it actually takes place after we get the decision. And that way, if the decision is a no, then the valuation is not carried out, and that way you get your refund. Let's say we're talking probably about 1 in 50, 1 in 75 cases. That's normally what we would do, just if it's one of those that really is. So of course, we don't want to get properties valued where it's going to be a no with Shawbrook, a no with Interbay, a no with pretty much everybody. It's a commercial valuation. They can run into the thousands at times. But it's a fairly rare occurrence. I mean, one of the things we do as a company is we check through absolutely everything and make sure if there's anything that we think is going to be onerous on the case, we will cover it off. So when it's submitted to lender, they've got to not come back and say, well, why is he missed payments on the mortgage? Why is there bounce payments on the bank statements? We're already covering that off. So they're getting that with the explanation. Yeah.
I'd also add, obviously, with the buy-to-let hub, the automated valuations are run as part of the application, and there's no charge for those. So again, some lenders charge for automated valuations, so that helps on that side. The issue is obviously with physical valuations. A lot of the formal offers are heavily valuation led anyway, so it's not really any value to be added to underwrite the case before we got the val, I'd say. So
yeah, and let's face it, a lot of the time, I would say most of the declines we get are because of comments on the valuation. So such as the one we had recently where they put in a spiral staircase that if anyone tried to walk down it, they probably would never reach the bottom without actually plummeting to their death, because it was an absolute death trap. And therefore, the property wasn't mortgageable. But you're never going to find that sort of stuff out until the value has been round. So Okay, one more question. There's no more from delegates. So I've got, are you able to consider owner-occupier trading businesses yet?
Yeah, so that's been something we've been shouting and banging the drum about for a while to have that back, because we did stop lending to people that either trading from their own business or have an opco-propco situation where they've got a trading company and they pay rent to themselves as an individual or to a property company that they own as well. So we haven't got that back yet, but the good news is that our risk team have sort of approved that we can bring it back. So imminent news expected in the next few weeks about bringing that back, which we're really pleased about.
So cases we get in, inquiries we get in, we will be talking to Shawbrook just in case it's, if it's one that they say, do you know what, we can't miss out on this type of deal because it's just, it's good. It's something we really, it's the type of business we really want. So we will be referring those over following our meeting with Lee on Tuesday, I think it was, wasn't it?
Yeah.
So, Lee, no more questions. I've got no more. You only set yourself 2, and you answered both of those perfectly. Thank you very much. Lovely to see you again. That's twice in a week.
I know.
See, I've seen you more often. I've seen my wife this week, to be honest with you. I'll let my IT team take you out of the meeting. Don't take yourself out, because we did have a delegate who almost shut down the entire thing a few weeks or a couple of months ago. So they'll take you out, and our next speaker will appear very shortly. I will now do my bit with them. But thanks again, Lee. That was brilliant. Thank you. So our next speaker, we have Annette Tilbury from West One, who's talking to us today about the West One buy-to-let proposition. Again, we've not actually met Annette face-to-face as yet, because she was appointed to us last year. And I think last year, maybe beginning of this year, I'm not quite sure. Time's flying so fast at the moment. But with the sort of discussion we've had so far, she really does know her stuff. And she should appear any moment. Me going to waffle and flannel until she appears in this. So you should have received this morning. There's been I've had a couple of emails, just so you're aware, from one was for Peter Robinson, just so you're aware, your mailbox is full. So you haven't got it's saying you haven't received the stuff. So if you just want to pop me an email, I'll then send you, if you've got an alternative email address, I can send it to that. So you've received this. This is the West One buy-to-let guide, hot off the press at the end of October. And there's Annette. Hi, Annette. Can you hear us?
Hi, yeah, I can. Thank you.
Fantastic. I do love it when technology works. Right. Okay. So this is what you should have received, delegates. So you get that to hand if you possibly can. So a little bit about Annette, first of all. She's passionate about this specialist area of the market and uses her knowledge and experience to develop key relationships, looking after sales and distribution for buy-to-let mortgages. Annette loves helping people, gives her a real buzz when she manages to get a difficult case through and make a difference. Prior to joining West One, Annette worked at Foundation, doing a similar role, and CHL Mortgages. Is that the old CHL or the new CHL?
It was the old CHL, yeah.
That is going back. Christ.
Yeah, 23 years I was with the old CHL.
Blimey, okay. CHL Mortgages has undertaken a variety of roles within the sales, asset management and underwriting, building new teams and expanding her knowledge of residential and buy-to-let. Prior to CHL, and this is the one I was going to ask you about, when I saw this last night, it was like, blimey, I know for them before. She worked for the Mortgage Corporation.
Yeah, for my sins. Yeah, I really liked it. But obviously the crash happened.
I can barely remember them, to be honest with you. Yeah, because they were. It was the crash in the early 90s, wasn't it, that they were around. So I haven't heard about them in donkey's years. So,
no.
And prior to that, Alliance and Leicester. Right, okay.
Yeah.
Did you start work when you were 7 or something? When did you come into the market?
Straight from school, straight in there.
Yeah. Well, there you go. So somebody else with 30 plus years, well below 30 plus years experience by the look of things. So, which is great. Okay. And Annette's interesting fact, she adores going on safari and photography. That's abroad, I presume.
Able to do because of
COVID. not safari parks in the UK, I presume. You're not going to
South Africa mainly.
Not Whipsnade Zoo, for example, which is just up the road from us. Okay, so that's your thing. I would love to go on safari. Never done it. I've always wanted to, so it's on the bucket list, along with 151 other things. So
yeah, I bet, especially after the last couple of years.
Absolutely. I live to be about 140 to do everything that's on my list. Anyway, I'll stop talking nonsense. Straight onto your presentation, because we are exactly 10:45. Over to you.
Yeah. Thanks a lot, Tony. Well, as Tony mentioned, I'm Annette Tilbury. I'm the National Account Manager looking after buy-to-lets for West One Loans. So I'm just going to go over the buy-to-let proposition with you today. And basically West One's got a mission to explore, create, develop specialist financial solutions that make a real difference to people's tomorrow today. And since the inception in 2002, the Enra Group's focus has been on shaping the specialist lending market to become the UK's lending non-bank specialist financial provider. That's quite a mouthful. And to achieve our aim, we've continued to support and build our relationships with our key partners, financial advisors, developers, homeowners, and selected sectors within specialist lending. And you may be aware that we offer bridging, development, second charges, as well as the buy-to-lets that I'm going to be talking to you about today. So within the Enra Specialist Finance, really the buy-to-let team is the new kids on the block. We were established in June 2019, and I joined shortly after then. I joined at the end of 2019 to really meet the growing needs and opportunities in the buy-to-let space. And it's really grown from strength to strength. And we're really looking to help clients that perhaps the high street haven't been able to help with, or they are coming out of short-term lending and we're going to be that long-term solution for them, or they've met exposure limits with the lenders that they've been dealing with, and obviously we can pick up and help with that. Gross lending in 2020 was 108 million, and the average time from application to completion with ourselves was 41 days. And we've split our product range, so we have a standard and specialist range. And as standard really implies, that's more the standard properties, so your single let properties. And specialist is really your HMOs, multi-unit blocks, holiday lets. It also covers properties that are above or next to commercial, and also expat clients, so the more sort of specialist ones. They're both available for individuals and also limited company lending via an SPV, amateur and professional landlords, first-time landlords, and portfolio landlords. So across the board, really. So let's first of all talk about property. I'm sure you all agree that standard properties are very well catered for all lenders. But when it starts to come to commercial, a lot of lenders aren't very keen. And I would say that's a really strong selling point for West One. We do a hell of a lot of properties, either above, sometimes it's opposite or next to commercial. And the high street tend to be quite concerned that are these properties going to be able to be let for the amount that is expected, and will they continually be let? But obviously, where we've got experience in this area, we're quite happy to take a view on those types of properties, particularly flats above shops where it might be a food outlet and that sort of thing. I'm going to go over some case studies with you shortly. But if they're next to a pub or late opening places, quite often they're considered that they would be more difficult to perhaps rent and even sell. So a lot of lenders will try and steer clear of those, whereas we're quite happy to help. Secondly, there's an area of complexity more around properties that have been divided, your HMOs and multi-unit blocks, and certainly some of the high street will restrict to just 6, whereas we'll go up to 10. And we're quite happy to lend to first-time landlords on HMOs, multi-unit blocks and holiday lets. We don't have any restriction there. And where the high street will see licensing as quite important, we're quite happy to offer, particularly if it's purchased. Obviously, they don't own the property, so as long as they've applied for a license, then that would be acceptable to us. We also will look at multi-unit freehold blocks, so up to 10 units on the multi-unit freehold. We just look to get a charge over the entire freehold. And an interesting piece of our criteria is we will do partial multi-unit freehold blocks. So if you've got a client who has got 12 flats in a block, they've sold off 4 of them, and the remaining 8 they still want to mortgage on a freehold rather than doing them on individual leases, we're quite happy to look at those. So you just need to refer those across to us. We'll also look at new build properties. Again, I would say that's a very strong selling point for West One. We will lend on the high-rise block, so we don't have a restriction on the total number of stories in the block. We do ask that anything over 5 stories is referred to us. And also we're quite comfortable with commercial on the ground floor. So particularly in Manchester, Liverpool, there's been a lot of these new high-rise blocks, commercial on the ground floor, and we've been quite happy to take those on board. So I always suggest you refer those to us, because there could be developments where we've reached our maximum exposure. So it is worth checking that. But obviously they tend to be the types of ones that the high street aren't comfortable with, very high rise, and if there's commercial on the ground floor. So it's worth bearing that in mind. So then we're going to move on to the applicant and the different types of applicants. And I'm sure you will remember restrictions coming in 2008 with PRA and narrowing what the high street can actually do. And we're finding that they still, unless it's a sort of standard prime individual, that they're not really willing to lend. And certainly landlords that have got large portfolios find it very difficult to place business with the high street. And we're also finding landlords where they were planning to develop portfolios in retirement are struggling a little bit with that as they're getting older. Many lenders restricting to age 70, whereas we're 80 on application. So I've got a portfolio going through at the moment where the broker couldn't place it, and we've managed to place it because he's 80. So it's worth bearing that in mind if you're struggling. We also do expats, and finding that very, very popular at the moment. Our standard policy is if they're in the EA, it doesn't need to be referred. If they're outside the EA, then those cases do need to be referred across, just to make sure we're comfortable with the details of the deal. And generally, when we're looking at inquiries, you'll get a response from us within a couple of hours, 3 to 4 maximum, unless we need to refer it perhaps to our in-house valuation team, where they can take a bit longer, perhaps the next day. But expats, imagine if you've got a high-flying English corporate lawyer who's practicing in Madrid, wants to do a buy-to-let remortgage and struggling to get assistance with the high street. That's a classic example of where West One can help. They do need to own at least one property in the UK, and we can lend to individuals or limited companies. We tend to find the majority are in individual names initially because it was their home, and then they've gone abroad and that's the one they want to remortgage. Also, self-employed individuals are finding it harder on the high street, even for buy-to-lets. And where we don't have a minimum income and don't generally require any evidence of income, it just makes that whole situation a lot easier. And even employed applicants are still finding it's difficult with minimum income such as 25,000 with a number of lenders. So the fact that we don't need the minimum and we don't generally need any evidence, it just keeps the whole process a lot easier. The only time we would generally look to evidence income is if they're a basic rate taxpayer and we have a lower calculation for basic rate taxpayer than higher rate taxpayer or additional. And if they need that lower calculation, we would look to evidence that they are a basic rate taxpayer. If it fits on the higher calculation, then we still wouldn't need the evidence because it doesn't really matter because we know it's going to fit on the higher calculation. Also, clients that haven't got a perfect credit record, we do accept adverse. We've got a W1 and W2 product range. Really, W1 is for clean clients and W2 is those with credit blips. But a lot of people don't realise if somebody had a historic issue and the CCJs are over 3 years old, excuse me, if a CCJ is over 3 years old, or it's been satisfied, we don't take those into account. So we have had situations where in the past, perhaps they've had a business that's failed and they've got quite a bit of adverse, but we've got the explanation and we're quite comfortable with looking at those cases. So it's worth thinking of West One for that. And finally, lending to limited company, huge business for us. We've seen a big growth in it, and we can lend to up to 4 applicants on a limited company. We don't have a minimum trading period, and there's no difference in the interest rate when it's going on a limited company or individual name. And we're very flexible with the SIC codes that we will accept. So providing they relate to property management, investment or development, then we'll accept those. So we don't have a set number of SIC codes that we'll allow. And also we will allow trading companies. Sorry, excuse me a sec. I can feel like a little thing in my throat. Sorry about that. Yeah, we don't lend to trading limited companies, but we can lend to a subsidiary of a trading company. So what we're getting quite a lot of is where a development firm over the years have kept the odd property here and there, and they want to mortgage those, and perhaps they've got limited options as a trading company. So they're setting up a subsidiary SPV, and we can lend to that subsidiary, providing the ownership is mirrored exactly. So the same ownership for the trading company and the SPV. And the good thing about that is when it's a subsidiary company like that, they need to get an accountant's advice, but they should be able to qualify for group relief for stamp duty rules. So it's bad enough paying it once, so you don't really want to be paying it a second time if you can help it. But that's obviously a way that we can look at things without the need to having to pay it again. And just some quick useful criteria points. So our minimum term is 5 years, maximum term 25. We'll accept applicants aged 21 to 80 on application, maximum 4 applicants. If you did have a limited company and you had father and son, we get quite a bit of, and obviously the son was perhaps 20 or 19, we can look at those as an exception, but it would need to come across as a referral. But if it was a sole applicant that was 19, we wouldn't be able to do it that way. As I said, no minimum income or evidence required. First-time landlords, we're quite happy to accept on our HMOs, multi-unit blocks, holiday lets. They don't need to have prior experience. The property doesn't need to have been used as a holiday let before, etc. And a real strong selling point for us, I think, is family gifted deposits. We do allow, and we don't have any restriction on the maximum percentage that they can be gifted. And we don't have a requirement that the applicant must be putting some money in themselves. So again, that can be quite a nice one if they've got wealthy parents gifting them lots of money. Consumer buy to let and let to buy, another strong one for us. We do require on a let to buy that they are purchasing a new residential, and we then ask for simultaneous completion. So we don't do what we call let to move. So if they just wanted to let out their current home onto a buy to let and move back in with family, that wouldn't be one we could help with, unfortunately. So I'm just going to go through some case studies with you now, some cases that we've done. So this was a first-time landlord that had converted a barn into a 6-bedroom property, and they wanted to rent it on a holiday let basis, which we were happy to do. And we based it on the current value. They had obviously not owned it that long and done some works to it. So we always assess on an AST rental figure. So even though it's a holiday let, as you can imagine, if they're first time buyers and the property's never been used as a holiday let before, then it's all estimated data. And we're already getting the AST values from valuers, so it just keeps that nice and simple. But yeah, by taking a common sense approach on this one, we were able to lend the clients what they needed based on the current value. you. No need to wait 6 months or anything. We do day one remortgages, and no restrictions on the fact that the client was a first-time landlord. So as I said, the key thing is basing it on the AST rental. So the property does need to appeal on an AST basis. So properties on a holiday complex, for example, they're out. We wouldn't be able to help with those because the valuer is not going to say, yes, you're going to rent a property on an AST basis on a holiday complex. And also if the property has got restrictions, so if it can only be used as a holiday let, that wouldn't be acceptable to us. Or sometimes you get the properties where they can only be sold to people of 55 years or over. That sort of restriction we wouldn't be able to accept, unfortunately. But yeah, that was a nice holiday let deal that we did. This one was a really nice property as well. It was a HMO, and it was one where the client had over 100 buy-to-lets already, and they had come across the problem of trying lenders who were credit scoring, and because they're continually remortgaging, they were finding issues with their score was quite low. Nothing untoward about the client themselves, it was just really the amount of searches and everything that was being done on the credit cert. We don't do any scoring, we just use Equifax, so there was no issue with that with us. And we were able to do this one, as I say, just over £1 million at 75%. Because we don't stress test the background portfolio either. If you've got clients that have got properties in London, sometimes they're struggling to meet lenders' criteria on that. So not having to stress test the background portfolio is quite a big one for us. And this particular client, they fitted on our W1 criteria, so we could offer them up to 5 million. So it just means it's opened another avenue for them where they had got to the limits with some of the lenders that they were dealing with. So this one took 45 days from application to completion. So it meant that they were able to complete on their new onward purchase without any difficulties. So that was quite beneficial for the applicants. Now this one is a bit off the wall one, and probably Andrew Ferguson, who heads up buy-to-lets, he'd be like, oh, why did you show them that one? But I think it's always good to show you these borderline cases that we do manage to get through on occasions. So this particular flat is ex-local authority with deck access, but above commercial. And to be honest, this is the only above commercial ex-local authority with deck access that I've ever come across. So we do require, when it is an ex-local authority property, that for at least 40% is in private ownership. So we generally say around 50% mark, but I know we've been prepared to go down as low as 40% if it's a fairly good property and in a good location, so good demand, etc. Now this particular one, not only is it ex-local authority flat with deck access and above commercial, but they also were doing the rental to the local authority on a 5-year agreement, which again, that's fine with us. We can do up to 5 years. We don't go above 5 years. But a lot of lenders aren't comfortable with that scenario where the council effectively have got the agreement and they're putting in their homeless people before they're able to find more long-term housing, etc. But we're quite comfortable to do that. So it actually helped this client. It was only 60% loan to value, so that's why we were happy to make an exception on it. And it's always down to a satisfactory valuation report and no adverse comments. But if you get any ex-local authority and you're not sure, I quite often get asked about the percentage of owner occupation, because sometimes it's really hard to get the information from the local authority. And we, as a real basic guide, we use Street Check just to have a look, and then at least you've got an idea, is it way off the mark or is it going to be okay? So it's worth just having a look at streetcheck.co.uk, and then you can just check that one out. So the the next one we've got, oh, this was a really nice one. I like this one a lot. It's probably really hard for you to see from the photo, but the blue sort of building that we're lending on, the building in the middle, and the blue building is actually a kebab shop, and the black building, the other side, is a cafe. And generally, when you're talking next to a kebab shop or above a kebab shop, something like that, we wouldn't be any more than 65%. But this was in a really good location. It was a bit of a quirky property, but I knew the area really well. And so I referred it to our in-house valuation team to say, I know, look, we'd only normally do 65%, but they really are looking for 70%. They bought it on bridging, they spent a load of money on it, and they want to pull out the maximum, and 65 is just not really going to cut it for them. And so they reviewed the area, the comparables and everything else, and also looked at the property. And because it was a very high quality conversion, they did say that they thought the layout was a little bit quirky, but they said because of the high quality and the very good location, they would be prepared to go 70%. Subject to a good valuation. So on this one, it meant that the clients could refinance it very quickly and pull out as much as possible. So you always get one that you think, oh, well, I wouldn't have expected. If somebody just said, oh, would you do 70% on a place above or next to a kebab shop, I'd be going, no, 65 absolute maximum. So it's nice when you get the odd ones like that where it's a really nice property and we're able to sort of go a bit further for the clients. And this one is, again, nice location. It's a bit difficult to see, but the aerial view just gave you an idea that it is right near the sea, etc. And this was a holiday let where there was 2 units to the property, and the property had been converted into the 2 units, and it was a grade 2 listed. And it's only since I joined West One that I was aware that there's also a grade 2 star, and we don't lend on grade 2 star because the level of restrictions is much higher, but grade 2 is fine with us. Also, this particular property was one of historical interest, and so it was exempt for EPCs as well, and we don't get many of those, to be honest, but this one was. So on this particular one, we were able to do the loan of 525, and the applicant owned the property jointly with somebody else, and they wanted to buy out that person and capital raise to build their portfolio further. And so we were able to do that for them. So that was a nice one to get as well. Bit better than the ex-local authority one, that one. Finally, I just thought I'd go over some of the areas why to use West One. So great turnaround times from inquiry to application. I mentioned earlier, generally inquiries are dealt with within hours, not days. And service standard for application posts and things like that, 48 hours. And each case is assessed by the underwriter on their own merits. There's no credit score, Equifax search only. No buy-to-let experience is required. We don't do first-time buyers, though. So one of the applicants would need to be a homeowner, preferably with mortgage payment history for us to be able to lend. Maximum exposure, as I mentioned, W1 clean clients is 5 million. W2, where they've got credit blips, would be 1.5 million. No minimum income or evidence generally needed. Limited companies, no rate loading on that, and quite a straightforward process, really. HMOs, multi-unit blocks, up to 10 bedrooms or units. Might be able to consider slightly larger if you've got any of those, but that would need to be done by referral, as would the partial. When they've already sold some off on long leases, they would need to be referred to us. Very flexible approach with the portfolio landlords, no background stress testing. We don't use EDM or eTech to verify the portfolios like some lenders do. All we need is a portfolio spreadsheet, so we don't need asset and liability statements, bank statements, statements or anything like that. We have a fast track remortgage option that's available only for remortgages, and that's from first charge mortgages. So if they've got a bridge at the moment, that wouldn't qualify them for fast track. As I mentioned, expats within the EA's policy, outside always by referral. So if you get that across to Specialist Financial Services, they can let you know if that's one we can help with. And of course, the holiday lets, we've seen a real big increase in that this year for sure. Thanks for your time. And Tony's back for any questions.
He is. He's back. Thanks for that, Annette. That was brilliant. I learned a couple of things in that I didn't know before. So that's always
brilliant.
Brilliant.
That's what I like to hear.
You never stop learning in this industry, as I say to my staff every day. Okay, we've got 3 questions from delegates, and there's a couple you set yourself. We are about 5 minutes, so I'll try and rush through these. So with regards to lending to expats, do they need a UK bank account?
Yes, they do, definitely. And they need to own at least one buy-to-let in the UK already. So if they haven't got any properties already in the UK and they're abroad, then we wouldn't be able to help them, unfortunately.
Makes sense, fairly standard. We've got another question. Will you lend to expat, first-time landlord who's abroad, first-time landlord in abroad for holiday let?
Yes, so that will go on our holiday let product, because we've got a special expat product and we've got a holiday let product. But if it's an expat doing a holiday let, it goes on the holiday let product. But yeah, that's fine. But that says first time landlord. So if they haven't got a property already in the UK, that would be a problem. Generally, what we get is what was their home, and sometimes they're just on consent to let. And they've let them out and they've gone abroad, a year ago, and now they're like, yeah, we're definitely going to be staying, so we want to get this formalised and on a buy-to-let mortgage. They're quite common for us to get those.
Okay. Multi-unit block, 6 flats recently refurbished, client putting each onto individual titles. Can you fund each separately?
If they're creating individual leases, we do have a sort of exposure limit. So we will do either 4 or 25%, whichever's higher. So out of 6, we could do 4 on an individual leasehold basis.
Okay, would you take a charge over the freehold as well?
We would, and we don't need priority on that charge, which is quite an important point, because I get involved in quite a few of these, and a number of lenders will insist that they've got priority, and that's fine if it's just West One and them, because they can have priority because we're not worried. But if you've got, I had a case where there were 3 lenders, us, I won't mention the other 2, and the other 2 kept arguing for ages because they both wanted priority, and in the end they had to pull away from one of the lenders, and we got the extra cases because they wouldn't back down on both saying they wanted priority, and you can't have both lenders having priority. So
okay,
yeah.
These are the ones you set yourself. So do you accept an HMO that is let to a council?
Yes, yeah, that's quite big business for us. We've been getting loads of those.
Okay, and your last one was, do West One accept properties where each bedroom has a kitchenette?
We can actually. So that sort of case, I would say, refer to us. But we had a case recently. The key thing is when we say kitchenette, the case that we've done recently, it literally just had sort of a sink unit with your fridge underneath, a microwave, and that was it. So that's fine. If they've got something like that, or toasters and that sort of thing, that's fine. But what they wouldn't allow is if it had an actual oven that was, even if it was an electric one, if it was looking like, oh yeah, you've got your hob there, an oven, and that's too much. But if it's just a small little kitchenette, they're fine with that.
And that's all the questions we have. Annette, thank you very much. Lovely to meet you at long last.
Yeah.
After all this time, so I'm
in with you in a couple of weeks. So I look
forward to we'll actually meet
face to face then.
Meet you in person. There's lots of firsts we found this year. People we've never met before or only seen on Zoom calls. So I'll get Simon to sort of like take you out the meeting. Don't close it down, otherwise we'll lose the lot.
No, I won't.
Our next speaker, who I know is in the room, but he's just been added on as a speaker. We have Christian Gugolz from MT Finance. Once again, you should receive this from us this morning. Christian, I can see you. Can you hear us?
I can hear you. How you doing?
Yeah, good. Is that a Maradona shirt behind you?
It is, yeah. It is.
Okay.
We got Cantona one, and we've also got Pele one as well. So
Blimey. Okay.
just showing off now.
Impressed. Right. Okay. So everyone should receive this from us this morning. I think it's a 4-page document from what I remember. But it's everything that you'll need. So please refer to that if Christian starts talking about certain rates and bits and pieces. A little bit on Christian. He joined MT Finance from loan brokerage Amiga Loans, where he focused on the development of its commercial, bridging and secured loan businesses. Christian started his career at a legal recruitment company before moving to a commercial outsourcing solutions firm where he held the position of national account executive. Covering London and the South East, Christian is responsible for introducing new brokers to their panel in this region, as well as strengthening MT Finance's existing relationships. I can't actually speak at the moment for some reason. Okay, Christian's way too modest. Now, I've done this to him 3 times now, so my apologies. Because we asked for the interesting fact, and he said the surprising fact was that he was born in Switzerland. We just thought that's not good enough, so we stalked his social media. Found out he's a big Supertramp fan. Who isn't? Let's face it. One of his brokers said having Christian as your BDM is like ordering 10 chicken nuggets and getting 11. But the one that I like best of all is this one, which was his proud fact. Last year, during lockdown, obviously, a very desperate time for everybody. Christian took the time to organise this. The Golf Bucket Challenge, you might have seen on LinkedIn. It raised more than 8,000 for NHS Heroes. I didn't participate because I would still be trying to get the ball in the bucket because I am officially the world's worst golfer. Plus, also got a shoulder problem. So, absolutely, always say and always will push that because that is an absolutely fantastic thing that Christian did last year. So, Christian, over to you. There's your presentation. I'll see you in 15, 20 minutes.
Fantastic. Thanks, guys. Thanks, Tony. Appreciate that. Hi, everyone. Hope you're all well. Good to be on here today and obviously tell you a bit about MT Finance. So, for those of you who don't know who we are, we've been around since 2008. The numbers I've actually provided to Tony here are actually slightly wrong. We are now 46 people, I believe. The awards, I think, has gone up slightly as well. We've won a couple more in the last year or so. We do still have four directors. We've had a couple of others join the board as well, and there's still four BDMs. So as I said, we've been around since 2012. This obviously should be my first slide. So I'm a business development manager at MT Finance. I've been here myself since 2016, so 5 years this month, actually. And since I started, we've actually gone from 10 members of staff all the way up to 45, as I just mentioned. So we have grown quite a fair bit. We've recently also introduced regulated bridging as well, which I can't go into too much detail with purely because of FCA rules. So I can't be seen to sell in that particular product. But if you do have any questions on that side, obviously feel free to ask Tony and the team about that, and then we can provide them with more details to give yourselves. As I mentioned, so over a decade of unregulated bridging. So we actually started back in 2008. The 2 directors started off with friends and family money, and now we've got 2 very large investment hedge funds that back us alongside some high net worths as well, which allows us to be very flexible in how we actually work and where we place our deals. So if we can't place them with the larger firms, because they're slightly more obviously the underwriting is a bit more stringent on those, we have some high net worths that we can place those deals with as well, which makes it slightly more flexible, as I said. So I'm just going to go straight into what makes us different. You probably get the same spiel from most bridging lenders. I think we all know that bridging lenders are all much of a muchness. Products are very similar, rates, loan to values, all very, very similar. So there has to be something that makes you stand out. So we're a very service-driven lender. We've won majority of the awards that we've won have been for service. So we take pride in providing that service to you guys. Obviously, making sure you know what's going on. We're not a typical tick box lender. It's you have the conversation, understand the deal, and treat each case differently. We're an asset-based lender. So in the sense that we will look at the property, we're not looking too much into the client's background. So majority of lenders, they will offer you a DIP or an offer in principle. You'll then go on to the legals and the legals, the underwriting and the valuation. Then you'll have a back end, obviously, credit team. So we don't underwrite the client in the sense that we're not looking at income and affordability. we're not really looking at clients' assets and liabilities unless the deal's slightly more complex. So it's asset-based lending decisions. It's the exit and the property that we are mainly interested in. As I already mentioned, we try to take a sensible approach, common sense approach, being pragmatic and flexible along the way. I think that is key to this particular market. I think you have to be flexible to get deals done, particularly when it comes to commercial deals and looking at types of properties and conversions and those types of things. You have to be flexible and take that common sense approach, because every deal is different. You'll be pleased to know we only have a one-page inquiry form, which I think obviously for you guys saves you a lot of time. I know you spend a lot of time filling out forms. So that form is effectively just telling us what the deal is, what the property is, how much they need, what the exit is. So it's a very, very straightforward application process. Obviously, appreciating you guys do need to do your due diligence beforehand, but the transfer of data from your forms to ours is very, very simple. We're transparent when it comes to terms and offers. So we will, when we provide you with terms, every particular fee that has to be paid up front or is retained from the loan is actually shown to you within the terms. So there's no hidden fees, which just makes it easier for you to go to the client and say, look, this is what you're paying, this is what you've got to pay up front, this is what's being retained, and this is what you have to pay back at the end of the loan. So it just makes it nice and straightforward for you. There's no hidden exit fees. There's no hidden ERCs. It's just a case of this is what it is and this is what you have to pay back. Our terms, they start from 0.65. Hopefully you've seen that product guide. Start from 0.65 and we are now at 0.79 at 70%. We have recently lifted restrictions on the 70% side of things, which means we can do 70% up to all values of properties. Obviously, it's all cases will be looked at individually. Types of borrowers, pretty much most types of borrowers we can look at, including your limited companies, your expats, your foreign nationals. There are certain foreign nationals that we wouldn't be able to look at, just due to kind of historical money laundering issues. But generally speaking, the types of borrowers that we can look at ranges from personal to limited companies, LLPs, expats, and they don't necessarily have to fly over to get the deals completed. They would just need to have a solicitor within that area that they're living in, that also is represented over in the UK as well. So we just need to have a UK practicing solicitor that can go through everything with the client. As I already mentioned, service is a big thing for us. We're completely honest and open about the fact we're not the cheapest on the market and we don't have the highest loan to values. And as I already said, to not have those things, you have to have something different, and it's the service and it's the people that make it happen. We have underwriters with legal experience alongside also one of our directors and owners who actually is a solicitor by trade, which basically just means that we can make commercial decisions on the legal side very, very quickly, and we're not heavily relying on our solicitors to provide us with yes or no's to complicated points when it comes to the legal side of things. So that's kind of what makes us different. I appreciate, obviously, I said already that all lenders are muchness in this space, but there are some things that we stand out on. Basic parameters. I've already mentioned a couple of things on that side of things. We do cover across the board on types of properties, so your residential, your semi-commercial, and your commercial assets. On the residential side, we provide first and second charges. On the second charge side of things, we can actually provide. We can sit behind a first charge on the unregulated side, providing that it's for a business purpose. So if somebody is looking to buy their first buy-to-let property, they're looking to inject funds into their business, anything business related can be secured on their main residence as a second charge bridge. Obviously, a lot of clients may not be comfortable doing that, but as long as there's a solid exit in place, such as sale of another asset, sale of development, or refinance onto a buy-to-let mortgage, then we're comfortable with lending on a second charge basis against their main residence. That is up to a maximum of 65%. On the first charge, we can, as I already said, go up to 70%. On the semi-commercial side, it's a very similar offering. We do max out at 65%, and our rates start from 0.85 on that side of things. We can look at all types of semi-commercial properties, mainly kind of your shops and your uppers. That kind of brings me on to the next stage of things, which is the heavy refurb. So with the semi-commercial and the commercial, you're obviously seeing a lot of deals where people are buying commercial and semi-commercial property to actually convert into residential, because of obviously the high street, due to COVID over the last couple of years. High street shops, retail shops, banks, pubs, bars, you name it, they're all kind of, there's a lot that has disappeared. So there now are a lot of investors looking to utilise those types of assets and turn them into investment properties, buy-to-let properties on the residential side. And that's where sometimes your bridging can come in if it is just a simple conversion as opposed to kind of a ground-up development. On the heavy refurb side of things, we can look at structural works, conversions, extensions. We currently don't work off GDV on day one. We lend off the current value, and we work on a revaluation basis, which means we will revalue the property on an ongoing basis to be able to then provide a further tranche or further 4 tranches down the line. So we can keep on lending. However, we lend against the uplift in value. If the property is owned outright or they've bought the property cash, we can look to lend against that property to provide the funds to actually do the works straight away. But we are lending against the current value. On the commercial side, things have changed slightly in the last couple of weeks. We've actually increased the max gross loan to value to 60%. Now, it's always worth having a conversation with us on commercial, purely to do with what the type of the property is. So 60% would be probably your standard commercial asset. We've just recently started doing your light industrial as well. If you're looking at a property that is, say, for example, some office space on a residential populated street, so the other properties on that street are actually residential, say a 3-story office for something like that, then we can look to go higher than 60%, because that property is effectively easily convertible back to residential. So it's just taking that common sense approach, understanding what the property is, and whether or not we can actually look what the property is and what the worst case scenario is. So if that property was to be repossessed, for example, obviously we want to look to be able to get our money back. If it's a property that can be converted into residential, then there's going to be a lot more people that would be interested in that type of asset. Just moving on slightly, so what can you use a bridge for? This is obviously all standard stuff, so apologies if any of the lenders have covered this off already. One of the biggest ones two of the biggest ones that I will point out on there that we actually cover are below market value purchases. So we can look to provide up to 90% of the purchase price, not to exceed 70% of the open market value. So we do work off open market value, not 180 or 90 day. But it would be the lower of the two. So up to 90% of the purchase price, not to exceed 70% of the open market value. That just means that if somebody's gone to auction, managed to get themselves a steal, we can look to obviously lend more. There are options as well to cross-charge against other properties that they own. So you can effectively get up to 100% of that purchase price. Which means they're not going to have to put much into that deal themselves. So it's just a very, very, very good thing to be able to do. The other one as well is lease extensions. So we can lend on short leases, provided that lease is going to be extended on drawdown or completion of the loan. The other good thing about that particular thing is that we can actually lend on the value with the lease extension. So if your property is worth 200,000 now with, say, a 40-year lease, if that lease extension is going to put the property up to 250,000, we can lend against the 250,000, providing that lease is extended on completion. I think the lowest we've ever gone on a lease is 7 years, which is obviously very low, but we would need that lease to be extended on drawdown of the loan. So those are the two main ones that I'd look at. The other ones are obviously very, very straightforward. So your time restricted transactions. Now bridging should be very, very quick. And everyone always says they're the quickest. We tend to kind of go from like 2 to 3 weeks average. Light and heavy refurbs, pretty standard, and also development exits. The development exits will sit under our standard residential product guide. So we don't have a specific development exit product, but we can look to do that. So if somebody's finishing the development and they need to raise some more funds for a further development or to invest elsewhere, we can look to lend against that asset, that property, providing it's wind and watertight. And I'll also just quickly mention your re-bridges as well. With everything that's been going on over the last couple of years, I think there's been a lot of people that haven't necessarily been able to exit their bridging loans purely because of timings where you can complete a property because you couldn't get materials or contractors out. So those types of re-bridges, and also people looking to sell as well. If they haven't been able to sell their property, then we can obviously look at those as well. I'm going to skip this one because, as I said, I'm not technically allowed to go over the regulated side of things. That I should have taken that one out. On the regulated side, any questions, please direct those to Tony and the team, and happy to answer those. Just a little outline here of our process. As you can see, there's very few steps in there. There's no underwriting of the client. There's no credit team back end as well. So when you apply, you can apply in 3 ways. You can give us a call, ping us an email, or even text me, or whatever it is. You can send us those details. Always better to have a conversation over the phone first, just so we can obviously understand the deal as a whole. Always makes life a lot easier with any quirks that are in there. As soon as we get that new inquiry form, let me go back one step. Actually, we can send you some indicative terms first. It just gives you an idea of what it looks like. Those terms generally come out within 2 hours, normally within 20 minutes. A lot of the time within 10 minutes. That just gives you an idea of what the numbers look at. Once you've seen those terms, if the client's happy to move forward, we'll just ask for a new inquiry form. And then we'll send you an offer in principle, which normally comes out within 2 business hours. Now, that one thing that is important to note is that that offer in principle is effectively fully underwritten and fully credit backed. As I mentioned earlier, we don't have a back end credit team. And we don't really look at the client's income affordability. We don't have a form or an application form as such as you do on the regulated side, or you do for a buy-to-let mortgage or a standard mortgage. So that is effectively fully underwritten, just subject to valuation and legals. The valuation, we will always have to do, as it stands, a full valuation. That normally comes back within 72 hours. It should be it's normally, I think the SLAs are 3 to 5 working days, but we can get that booked in as soon as the client has paid the val fee to us. So the client will pay the val fee to us, we'll put the valuation directly, and then that valuation report should come back within 3 to 5 working days. Now, we can start the legal process at the same time. A lot of clients will want to wait for the valuation to come back, just to be comfortable. Obviously, it's valued up to what they expected. And so that we can run them alongside each other. So we just need the client to pay the legal undertaking to their clients, and then we can send the checklist out to their solicitors to get things moving. So we do have to have solicitors on our side, which we have a panel, and also solicitors on the client side as well. And then we have our underwriters in the office who are effectively the go-between between the two solicitors. So it just helps that process. So they're not necessarily talking directly. They're talking through somebody here who's kind of mediating and helping get everything in that we need. And then obviously, as soon as those legals are completed, the funds are released, and there we go. And you've got kind of however long you need on that loan, and we're always here to help you. And during this whole process, you'll have a dedicated case manager as well, who will effectively hold your hand and make sure that kind of you're up to date with everything and you've got everything you need, and vice versa. Just a couple of case studies for you here. So semi-commercial auction purchase, as I mentioned earlier, auction purchases, we have to obviously complete within 28 days. So bridging finance is key for something like that. So with only 3 weeks to complete the transaction, obviously they're running out of time. And at that particular point, you risk losing the deposit. We issued an offer in principle on the same day, and we were able to instruct the valuation and solicitors on the same day as well, which obviously I mentioned a couple of minutes ago. And that just took 10 days, providing a £400,000 loan at 65% over 17 months. So it just meant that the client was able to complete the purchase on time, didn't lose their deposit, and then significantly increased the value of the investment property to then sell on with a tidy profit on that as well. If anyone's got any questions at any point, obviously, just if you type it in the box, and I'm happy to answer. Second charge to fund works, which I mentioned. This client was actually looking to complete works on their investment property, but the lender actually pulled funding the day the loan was due to complete. So this happened a lot during lockdown. There was a few lenders that pulled funding, which meant that the broker approached us. We were able to accept the retype, which we often can, depending on who that particular valuer is. If they're on our panel, we can look to accept the retype. And then we supported that with an audit from one of our panel surveyors. So just to get some commentary on that thing to make us a bit more comfortable. So just within 3 days, we provided a £490,000 second charge. So bearing in mind, obviously, we had to get consent as well from the first charge lender. We managed to get that with no exit fees or ERCs or personal guarantees required. So it gave them the works they needed to carry on the works, and then obviously again increased the value of the investment property. And just finally, this is more alongside the heavy refurb. So client had purchased a barn. I believe they purchased it cash, and they required some money to develop it into 3 residential dwellings. So at this point, we were able to provide a loan within 10 days. And then we actually managed to provide them, I believe, some further tranches to complete the property once the value had increased. So say 6 months down the line, the value of the property increases, we can then look to lend more funds against that to complete it. So it's a very, very good product if you own the property outright already. And that is pretty much it. And hopefully it should be effortless every single time. Fingers crossed.
Always is. Just a little bit, if you need the documentation, that includes the MT Finance Inquiry forms. Just go to lenders.specialisthub.co.uk/MTF, and you can find everything you need there. I need to change that because it says SBF. My marketing department's going to go mad at me because I'm using an old brand there. There's actually a hub decision in principle form now, not SBF. That's basically what you need to do. Just pick up the phone, give us a call as usual. Right, questions. We've had no questions whatsoever, Christian, which means you've covered
whether it's good or a bad thing.
And you've also answered one of the questions you set yourself as well. So the only one you've got is, can you lend to foreign nationals?
We can, yeah. So as I mentioned, we can lend to foreign nationals, but a lot of it will depend on where they're based. So there's obviously a lot of there's a few countries that have historical problems with money laundering. So there are certain countries we can't lend to. We have actually in the past flown employees out to see clients to get wet signatures. This is talking 2 or 3 years ago. So we've actually sent somebody to Santiago in Chile. We sent somebody to Kingston in Jamaica to make sure that we get the deal done. So we obviously joke and say we don't go the extra mile, we go the extra kind of 3,500 miles. But having said that, that has changed slightly. So we just need the clients to have solicitors in the country they're in that are kind of represented within the UK as well. And that solicitor does need to be able to practice UK law, to be able to obviously provide them with the information on the legal mortgage and go through everything with them to make sure the client is comfortable with that. So in the long story short, we can. We just need to obviously check the background and what they're looking to do.
Terrific. Okay. We've got no questions. So Christian, thank you very much as always.
Thanks very much.
Brilliant. We'll see you very soon.
Fantastic.
Simon will take you out the meeting.
Thanks, guys.
The rest if you want. Okay, so we have, as our last speaker, we've got John Thompson from Step One Finance, second charge lender. Been around quite a while, since pretty much the start of, the end of the last recession, around 2010, 2011, I think. Great lender to have on board. And a lender that we've used frequently in the past because they do some stuff that no one else will do. John, can you hear us?
Yeah, can you hear me?
Yeah, okay, absolutely fine. Loud and clear. The reason I couldn't hear the first speaker, everyone, is because I had my volume turned right down. My grandkids have been using my laptop.
All right, no problem. Yeah, I can hear you fine.
Must have been watching stuff that they shouldn't have been, so they turned the volume down. Yeah, all good, John, all good. We will crack on. So a little bit about John first of all. First of all, just everyone, you've received this morning on email, so refer to that should you need it. Step One are very much a niche lender. They're not at the cheapest end of the market, but they are probably the cheapest of the tier 2 lenders that we've got. So there'll be some very good stuff in this if you do come across second charge business. So a little bit about John, fully CMAP qualified, over 20 years experience in the second charge residential and buy-to-let industry. Away from work, he's a keen sportsman who likes to play football, tennis, and he regularly visits the gym. He also enjoys countryside walks with his wife and children. I actually go on countryside walks to get away from my wife and children. I've got one of them phoning me at the moment. Anyway, I take the dog, of course. Interesting fact, John is the team manager of his son's under-15s football team. I wish you luck, John, because I did the same. And you wait till they get to under-17s or even under-16s with some of them when they discover the joys of drinking and the opposite sex or the same sex in some cases, and every other thing you can think of. I've got some absolute horror stories about my football team. I gave up a year early because I just had enough. So good luck on that one. I wish you well. I'm glad I'm not doing it anymore because it drove me bonkers having to look after other people's kids. Right. Anyway, over to you. Here's your presentation. I'll see you in 15-20 minutes.
Great. Thank you. Okay. Hello, everybody. I'm John Thompson. I'm the BDM for Step One Finance. What I'm going to do today is just go through just all about Step One Finance. We're a second charge lender, so a second charge specialist lender. So we focus on second charge residential and second charge buy-to-let products. Okay, so if you've any questions, obviously write them down. I'll answer them at the end as well. Okay, so I'm going to give you a quick introduction about Step One Finance. I'm going to go through some criteria highlights, some USPs which will be useful out there in the marketplace for you, just about our income and affordability assessment, our adverse credit assessment as well. I'll skip through COVID-19 criteria because hopefully we're nearly over that, but I'll whiz through that and give you a couple of case studies as well. Okay, so a bit about Step One Finance then. Head office in Woking. We're established in 2010. Okay, we've got a mission to operate an industry-leading consumer platform, and we're built on traditional lending values. So we've got decent lending values there. We've got a management team with loads of experience. So we've got Martin, who's head of lending. He's got around 35 years worth of experience in secured industry. I've got 25, and my boss, Hayden, he's got probably around about 30. So loads of experience. And that's just the management structure there. Okay, so we seek to offer products that are easy to understand and provide solutions for customers. And we provide creative and effective lending solutions along the way. And we focus on offering customers a personal service. So we do have a team of underwriters there at our head office. There's around about 10 underwriters. Once one of your customers is allocated to that underwriter, they will stay with them right through to completion. So they'll deal with them on a one-to-one basis, obviously unless they're on holiday. Okay, so our products, we cover second charge residential and second charge buy-to-let products. We did do bridging and unsecured, but those areas have been paused. So purely residential and second charge buy-to-lets. We lent right through the lockdown period, so we've got really good backing from our partners, and we will make common sense decisions on lending. So on that basis, ultimately, we will accept certain cases on referral. So you do that via Tony's team, and they obviously speak to myself and our team at the office. We do certain cases on referral if they sit slightly out of criteria, if it's the right thing for the customer and ultimately, ourselves. Okay, so give you some criteria highlights. We'll do loans from 5,000 up to 500,000. Anything over 150,000, you would need to refer the case over to, via Tony's team first of all. They do it, obviously come to us. We do over 100,000. We do up to £100,000 for buy-to-let second charges. But we can do more than that if you refer it. Okay, loan terms, really extensive. So we'll do anything between 6 years and up to 30 years and anything in between. There's no maximum age. So as long as your customer is 21 or over, we will ultimately look to do the loan for them. if they fit within the criteria, but there's no maximum age. So we do loans for, you know, a lot of elderly customers if it is sustainable and affordable for them. So Tony mentioned the rates. So rates currently at 6.9. That's where they start from on a fixed or variable rate. We are looking at our products and our rates at the moment with a view to bringing them down. So we should have some movement with regards to rates on a downward scale really soon, which is really good news. We're dead excited about that. We say that there's no fixed rate premium as well. So you can put your customer on a fixed rate or a variable rate. There's no extra charge for that fixed rate. There's no difference in the ERCs either. So you can settle the loan, the customer can settle the loan early with a 4%, 2% and 1% charge in year 1 to 3, respectively, on all those products. We can do a loan for any legal purpose as well. So I'll go into a little bit more detail about that shortly. Broker fees, so you can charge up to £5,000 as a broker fee, and up to 15% of the net loan. And we'll do loans for customers in England, Scotland and Wales. Scotland is, well, all loans at the moment are a maximum of 85% LTV. Okay, we'll accept an AVM, so an electronic valuation on most loans up to 80% LTV. You will need to get a full valuation if you're doing a second charge buy-to-let product, or if you're doing a loan with a customer who lives in Scotland. So ultimately, main rule of thumb is it needs to be mainland England, Scotland or Wales. So we don't do any of the Isles or Northern Ireland. Okay, we do equitable charge cases as well. So that's where the first charge lender won't provide consent. So it's not a problem. We will do the loan, but it is maxed at 80% LTV, and there's a £50,000 max loan amount with regards to that. So that's just when you apply to your mortgage company for consent, and if they decline the consent, we can still do it, but it will be say capped out at £50,000. Okay. Now some USPs that you can obviously help sell the case with your customers. So you can do we do loans up to 85% at the moment, 85% LTV for loans up to 150k, and those customers can have adverse credit, so they can miss mortgage payments or credit card payments or have defaults or CCJs. We will do buy-to-lets up to 75%, I say, and the standard loan amount up there would be up to 100,000. And again, they can have adverse credit. Loan size, as I mentioned, 150k, but we will do up to 500,000, so £500,000 on referral. You just need to refer the case via Tony's team. Obviously, they would come to us. Okay, there are adverse credit plans available on all products and LTV bandings, and really good positive with us. There's no credit scoring, so ultimately what it says on the credit search, we will fit a product to what it ultimately shows on the credit search. So if the customer's certain amount of missed mortgage payments, they might have a default within last 2 years or a CCJ, it'll go on a certain plan. So without having to score the customer through, ultimately you can pick a plan off our product guide. Okay, like I say, mentioned before, equitable charges up to 80% LTV, and it's 75% for those second charge buy-to-lets, and that's up to 50k. Another fantastic product that we do, we will lend behind equity release mortgages. So not a lot of lenders, I'm not sure if any lenders that I know of do this. So we'll lend behind equity release first mortgages. The maximum LTV, I believe, is 55% on that, but we will do that. So if a customer's got an equity release mortgage, we will go on a second charge behind that. There's no maximum age, so we will lend to customers into retirement as long as the customer, we know that the customer is going to be able to afford the loan into retirement, and the loan's going to be sustainable for them. So if you are lending into retirement, that's fine, and we just need some type of note from the customer to declare that they will be able to afford the loan into retirement. For example, we wouldn't do a loan for a 80-year-old bricklayer, for example, but we would do one for a company director who's aging ultimately. Okay, so purpose of the loan, we will consider buy-to-let purchases, things like tax bills, if the customer wants to pay off an ex-partner, all that type of stuff we will do. So we'll do a loan for any legal purpose. Property types, then we'll consider most property types. We won't do HMOs. And with regards to valuations, you can do an AVM, so an electronic valuation, up to 80% LTV. Maximum loan size with regards to doing an AVM is 75,000, and we do properties up to 750,000. We don't do drive-by valuations, so it's either an AVM or a full valuation, and then you would need to get a full valuation if you're doing a second charge buy-to-let product as well. Okay, so with regards to income and affordability, we don't have any DTI ratio limitations or loan to income limitations. There's no strict minimum expenditure levels. Our underwriters will consider ONS figures once they're looking at the case. If your customer's declaring figures similar to the ONS, then the loan will go through. If ultimately the figures are well out compared to what the ONS figures may declare, we may ask for bank statements just to back what the customer's saying is correct. It's a simple I&E calculator, so it's an Excel document that the customer fills in, and as long as it's in by a minimum cushion at the end, then we're good to go with regards to the loan. We'll take loads of different types of income, so we'll take overtime and bonuses for most occupations. We do loans for contractors, so they kind of sit in between the employed and the self-employed. So with regards to contractors, we will use a day rate to assess their income. So it's a simple equation of the day rate times by 5 working days times by 46 weeks, and that will give us the yearly figure. Okay, self-employed applicants as well. We'll consider self-employed applicants. Well, we do loads of loans for self-employed applicants, but we will need 3 months bank statements to back up their self-employed earnings. So we'll need either an account certificate for the last 2 years or 2 years tax returns, and then we need those 3 months bank statements to back up what they're currently earning. We will do customers with benefit income as well. So we won't just purely do customers with benefit income. They have to have some type of employed income in the household as well. So we'll do a range of benefits and employed income, for particular customers, but we'll take most benefit income there. With regards to buy-to-let as well, we do a full affordability assessment. So as if you were doing an I&E on a residential case, you'd do an I&E on a buy-to-let second charge as well. So the customer declares what ultimately the income is, and then what they're paying out. Okay, so with regards to adverse credit, so we specialise in customers with adverse credit. We will ultimately look to help those. We do customers with no adverse credit as well, so we cover, let's say, most customer profiles. We don't look at a credit score when we look at all unsecured credit apart from communications and mail order. Okay, you're allowed to, the customers can have up to 4+ adverse units. So we'll take customers, let's say, for example, 4+ adverse units, maybe missed credit card payments, utility bills which have been missed, hire purchase payments which have been missed. They can have missed mortgage payments or be in an IVA or debt management plan. And so ultimately we will look to still do loans for those customers. And it depends on how many adverse units that the customers have, depends on what interest rate they qualify for. Okay, so like I mentioned, applicants in debt management plans and IVAs are considered. We'll do those up to 85% LTV. You can leave a debt management plan running if it's the best thing for the customer. So ultimately, a lot of the times they pay a smallish payment on a debt management plan. So you can leave that running if it's the best thing for the customer, but you will have to pay off an IVA if the customer has an IVA. Okay, and we can lend outside criteria. So we do a lot of cases on referrals. So if you get anything that you think, oh, it's slightly out of step 1 criteria, it's worth getting in touch with Tony's team, speaking to them, and they'll refer the case over to our team. We do write a lot of cases, well, a number of cases outside of criteria if it's the right thing there for the customer. Okay. Okay, so just a few case studies then. With regards to case studies, so a couple of examples. We did a loan recently for 215,000. The customer had accrued over a period of time a number of say debts and done some property refurbishment. So it was a consolidation loan. Customer had no adverse credit. The applicant, number 1, was employed, and the second applicant was a contractor. Now, they've been in financial services for 5 years, and they're a qualified accountant. The issues were the size of the loan, so it's above our 150,000 standard loan amount, so that would have been referred. And the contract was due to end in 3 months. But we looked at the previous history that the customer had with regards to his contracting, and it was deemed likely to be renewed. So we proceeded with that loan, and ultimately that paid out for 215,000 for the customer. Okay, so case study 2, we did a loan for 96,000 for consolidation and to repay loan to parents. The LTV was 65% and the property value was 1.1 million. There was some unsecured adverse credit. Applicant 1 was self-employed as an engineer, and applicant 2 had pension and benefits. The case had gone together, but the offer had been withdrawn. Now, we agreed to proceed with an AVM on this case, even though it was over the 75,000 standard loan amount that we'd do an AVM for. And because ultimately the customer paid a valuation together, and the valuer won't provide a retype to us. So we did an AVM on this one, and the loan paid out. So it just gives you a couple of examples of how we do loans, slightly out of criteria. So it is worth, making that call to Tony's team, and then ultimately they'll get in touch with us. If it does sit outside criteria, we'll try to do something for your customers. Okay, so I think that's probably everything for now. And I just want to just go back to the rate situation. We are looking at our rates and our products at the moment. So we have got some exciting changes coming up really soon. So ultimately, when those changes happen, then they will be communicated over to the industry. So they're likely to go down significantly. The rates, we do expect a good increase in business. So look forward to working with you going forward. Okay.
Thanks, John. Great information. Thank you very much. You've answered both of your questions that you set yourself within your presentation.
Brilliant.
But we've had one from Stephen, which is just regarding the lending behind equity release.
Yeah.
Which is a product I've been banging the drum for years, because it just makes so much sense.
Yeah.
That massive portion of the population now that has an equity release mortgage in place is not excluded from borrowing. So, but it says equity release lenders do not allow second charges. How do you get around that?
Okay, so we do a equitable charge. We won't need consent from the equity release company, so we would go as an equitable charge on that. So that's the way we get around it. Okay.
Also, there are actually now a couple of equity release lenders who do allow second charge, because we've been talking to them. But also, probably I expect the FCA to actually remove. They did that with first charge lenders who were causing borrowers problems by not granting consent. I expect the same to happen with equity release as well at some stage, because the FCA don't like borrowers having restricted choices or anything else. So with no more questions, nothing being typed. So John, thank you very much indeed. Simon will remove you remove you as a speaker. You can watch me if you want, You've probably seen it before.
Right.
But no, thanks, John. Appreciate it. We'll see you soon.
Yeah,
Thank
see you
you.
soon. Thanks, Tony. Thanks, everyone.
Cheers. Thank you.
Cheers.